Good evening. This is the video newsletter for Buy Sell Short for Thursday, August 18th. We're starting off with the VIX chart today, and no real surprise. Market down 400, 500 plus at one stage. VIX is going to go sky high. We had that nice little retrace on that bounce back over the last week, and then sky high today. Same old, same old. It's like a game of whack-a-mole right now, this market. Just when you think it's safe to stick your head out of the hole, smack comes the mallet, knocking you back down again. Had a little conspiracy going on today. We had, a few little things all popping up at the same time, and it was just too much. And the common denominator, again, Europe. We had some news come out that the Fed has been working with European banks regarding their U.S. operations and their lack of dollars. And news came out that one of the European banks that has been unnamed asked the ECB for $500 million in cash because they're having a liquidity crisis. You don't like to hear that kind of news in a market like this. Then we had Morgan Stanley come out, downgrade, say we're going into a global recession again. And, we had economic data come out this morning that there's just no way to spin it positively. Philly Fed report minus 30. They expected 7. And we came in at minus 30. And quite a few companies over the last couple of days, last night and today, coming out and just saying warning. And the warnings they are giving are absolutely awful. We had NTAP come out and say business just died 3 weeks ago and has continued to die. After hours, we had a solar company downgrade their guidance 40%, I believe was the number. And what's funny is, if you look at the time frame of when all this slowdown started, guess where it points back to? That stupidity we had last month regarding the debt ceiling, and right now we are paying the price. Businesses, consumers, everyone listening to the fear being spewed on TV every day, just shriveled up, put their hands in their pockets, and now we're seeing it in the economic data. And it's one of those things, you say it enough times and it becomes reality. Over the last several weeks, all we've heard is double dip recession, double dip recession, double dip recession. Then we had the debt crisis, and here we go. We're looking, we're on the precipice of a possible another double dip recession. If we go off the normal metrics, bank shares down 25%, et cetera, we're going to tip into recession probably if the Fed doesn't come to the rescue. If we look at the indice charts, it's sad. We are down so much over the last couple of weeks that today's 400-point blip, all it looks like is one of these, a month or so, actually 2 months ago, it looks like it was a 100-point drop. But then when we actually look at it, it's like, oh crap, the magnitude of the loss over the last month. Geez, that was a 400-point drop we had today. And actually, this is the biggest opening drop we've had since back there after the Fed meeting and the debt ceiling increase. We are oversold. It's kind of silly to actually say that. RSI is bouncing up on the 15-minute chart. Stochastics are in the basement, and we did get a nice 100-point bounce, over the last 30 minutes of the session. But if we look at the daily chart, you can see we've retraced back to that uptrend line support. Don't like seeing RSI roll over. Really don't like seeing when Stochastics comes up, hits 50s, and then reverses course. But every time we've had a big down day over the last couple of weeks, the next day, for some reason, we've been up big. So who knows? This is a market to maintain high or all cash. I mean, even throughout this rally over the last week, we've been at 90% plus cash, booking our gains when they came, and, playing half positions. And yet again, we're, really missing out most of this shitstorm that is hammering traders left and right. The open today, a lot of traders are actually cash right now, and what we're seeing is a no-bidder market. And that is why we're seeing stocks drop so much. And then we get some small buyers coming in trying to support the prices. But everyone is really sitting back and just saying, what's going to come next? SMH had a big gap down. After hours, we had Hewlett Packard come out, issue a warning. They're actually going to dump their web OS. They bought Palm last year. Their tablet is not selling, so they're already giving up. They're not going to put any money into it. So that stock's being hammered in after hours, and it'll probably impact the market in the morning. We're going to go back to our same old game plan that we've been employing over the last month or so. High cash, intraday scalping. For a lot of you guys, especially ones who have not been through this kind of market turmoil, we've been through many of these over the last 10 years. The best thing is just to sit back. Don't be trying to time the bottom. If the last 2 weeks have proved anything, after we had that bottom last Wednesday, we had some great buys a couple of days later. So you don't have to catch the absolute bottom to profit in this market. And right now, cash is king. We've got a lot of worries out there, a lot of fear, and that feeds on itself, especially when you got those idiots on CNBC, feeding that fear storm, which is what they do perfect. They feed the greed storm at the top, they feed the fear storm at the bottom, and they're really feeding the fear storm right now. And this time they've got the economic data to back it up. This talk about the liquidity issue in Europe is a concern, so we've got to keep that on the forefront. You do not go heavy long in this market with that kind of news out there. You can do it intraday, but flat going home at night is the place to be. So, looking at the indice charts here, if we do lose this 10,600 level, really quite possibly we could quickly see a move down to that 10K 9,700 area. But again, in a market like this, anything can happen. If you are buying a stock saying the bottom is in at this moment, just let this little voice go whisper into your ear. In a market like this, there is no such thing as a bottom. Caution, erring on the side of caution is the way to be. Anything can happen. We can be up 500 points tomorrow. We can be down 500 points tomorrow. We're just going to trade the intraday moves that it gives us, or just sit back and see what happens. Many stocks that we played on that bounce back last week, even though the market is a few hundred points above the lows, they're breaking through those lows. So we're going to need to see those stocks base out before we go back into them. And they're very, very attractive. Plays like HILL, PWAV, to name a couple that gave us 20% runs over the last week. They're right at their lows that they hit last week. And if they break through those lows, could see another 10-20% downside, which would make them even more fantastic buys. But, that is down the road. I know I've beaten a dead horse by continually saying this, but this market is breeding our next wave of profitable trades. Just look what happened on this small little rally we had over the last week. All the fat, nice little plays we had. Now, imagine the kind of moves we're going to have once this crap storm stabilizes. What do we have to look forward to? Next week, we have the Jackson Hole meeting. That is when the Fed, business leaders, bankers meet. This time last year, when we had the same kind of shitstorm swirling around in the market, that is when the market bottomed, when the Fed came out and gave their QE2 talk. Now, I actually believe we're going to see QE3 rather quickly. I posted the links in the chat room today for the reason why. And it's not the reasons you would think. European banks are having a liquidity issue. They're having a tough time finding dollars. U.S. banks are unwilling to lend to them right now, just with all the crap that's going on over there. Over the last year, European banks, their U.S. arms, were able to raise a ton of cash through the QE2 easing. So, European banks need dollars right now, and that may be a big reason that we see the Fed embark on another QE3. Remember, we're going to get zero help from Washington. They're on vacation. They have no desire to pump any sort of liquidity or money into this market. I'm going to say it again. I'm going back to what I said in October. When the Republicans got elected, we were fucked. And, we are seeing what's happening right now. You do not cut spending until recovery is in full motion. We are replaying exactly what has happened. If you go back to the history books, what happened in 1935 to 37, we came out of the Great Depression, New Deal, pumped a ton of money in, economy bounced, Republicans got elected. They said we were spending too much money, our deficit was too big. They chopped spending. We crashed into another recession. The only thing that saved us was World War II. Fingers crossed Bernanke does not let that happen again. And, not to get involved in the politics of it, but what happened in the last month with the debt ceiling is a big reason we are seeing this economic slowdown right now. So as for now, high cash. I would actually say go review, and actually I'll send out another email here shortly, a video we did back in January on how to trade markets like this. Even if you've seen it before, good refresher, just to give you an idea. But right now, I would be looking to be at least 90% cash, just like we've supposed to been over the last couple of weeks, even during this rally. If not, 95 to 100% cash nightly. Only buy stocks you really, really like. That's it for the video. If you've got any questions on any plays, jump into the chat room, send me an instant message, ask me what you think you should do, how should it handle positions you have, etc., etc. I'm there. I don't mind. Feel free to ask those questions. I will see you guys in the chat room tomorrow. Good night.